All right, all right. Sunday market update for all of you guys here on YouTube. Wanted to do a very quick weekly roundup, actually, as to what I saw happen on the close Friday in the markets. Of course, we had that big labor market print that came out on Friday that created a fair degree of volatility during the U.S. session, and sort of where I see things going into the week based off of that. So I did post this tweet back on Friday with the NFP data that was a disappointment in terms of the market's expectations. And what really happened, and I saw this happen in real time, was there was a very slight probability, maybe like a hovering between like a 1 in 5% chance leading up to the meeting that we were not going to see a change. So this sort of what you can see over here, this 0% chance that you can see currently was anywhere between 1 and 5%. Right after the data came out, it started to pivot to 100% chance, right, of an ease. And then in this case, actually 88% chance of a 25 basis point ease, and now 11% chance of a 50 basis point ease. So it went from, okay, are we going to see a rate cut or not at this meeting, to we are definitely going to see a rate cut at this meeting because the labor market is deteriorating so quickly. The question is now, will we see a 25 basis point or we see a 50 basis point rate cut at the September FOMC meeting? So as of right now, if we refresh the data, this is about 48 hours later. Let's see where we're at as of today. Basically the same, 89 and 11. I'm not sure why it's not loading. There you go, 89 and 11. So hasn't changed much at all. So now we're really talking about potentially having a 50 basis point cut, depending on, I guess, the inflation data that comes out this week is the most important factor to sort of determine the final expectations of what we'll see come the week after during the FOMC meeting. So like I said, let's do a quick weekly roundup of the charts. We did close last week right on the bull market support band, and we ended up bouncing off. This week we've held above that range the whole time. We're back at about 111K right now. S&P 500 had a very volatile day on Friday. It was in the green right after the print came out, and then sold off pretty heavily about an hour and a half after market open, all the way down to the 20-day moving average, and then bounced right off of it, right? So moving averages are quite important. I definitely suggest having the simple moving averages on your chart just to see where price levels sort of bounce off of, and see how they respect these short-term, medium-term, and long-term price averages, which is essentially what this is, right? This is the previous 20 days of price in white, previous 50 days of average price in red, and previous 200 days of average price in yellow. That's exactly how you view these from an analytical perspective. Now, the dollar index has not been resurging in any way. So I think the ability for the S&P 500's rally to continue based off of that is valid. Also, when it comes to crypto, I think the crypto rally can continue higher because of the dollar. Same thing here when we look at global liquidity, it's on an uptrend, especially when you put it on that 10 to 12 week lag, or the price is lagging by about 10 to 12 weeks to global liquidity, so you're pushing it ahead on the chart. You can see that the market is telling us, or the global liquidity analysis method is telling us, that there's still upside remaining in the markets. And when you look at the dollar, I mean, the dollar is the biggest killer or giver to global liquidity. In this case, the dollar has been relaxed into a very sort of weak downtrend here. Now it's stabilized sideways. Global liquidity has been growing during this time. So it's allowed global liquidity to expand during the process. Now, people talk about inflation. Oil prices have been moving down since the beginning of the summer. Even if you sort of take out this whole Israel-Iran spike and then drop from June, the trend from the beginning of the summer until now has been sort of sideways and down, specifically more so in August into September. So inflation is driven in the long term mainly by the price of energy, which is oil in this case. So we should see inflation numbers decreasing over the next couple of months. We may have some short-term blips up here and there if, tariffs are that big of a factor or not, but we'll have to just see. Overall, oil is telling us that inflation should be cooling down, not just in the US, but worldwide based off of this trend. Gold has been breaking higher. Gold's had a pretty good little run up off of this range breakout that we've seen previously. So interesting to see that. Oftentimes gold will actually break out, will lead a breakout, and then Bitcoin will follow it with a little bit of delay afterwards. It's not always perfect, but there definitely is a correlation to be mentioned there. And then when it comes to looking at Bitcoin specifically, I always get many questions about, what do you think about Bitcoin? We formed a low so far, right? Now it's up to us at this point to be able to put in a higher high and a higher low, or at least a double bottom to reconfirm this uptrend building. I would, probably say that the uptrend that we've been currently building since the spring lows is in jeopardy of breaking if we lose the 107K level again and we form a lower low, right? That would probably open up the can of worms to more downside. And then from there, does the 200-day moving average catch us? Do any of these sort of previous levels that we bounced off of catch us? Now, everyone's been very bearish down here, right? Just to sort of set the record straight, everyone has been very bearish down here. Also, everyone was very bearish here, and especially all throughout this range. And ultimately what we saw each and every time, this was a more prolonged, violent downtrend, but, I think this was spurred by completely different things, fears of tariffs, different fiscal regime, then switched up on us in April when the bond market was broken. If you don't know what I'm talking about, go and watch the longer videos on this channel. But specifically looking at Bitcoin here, we've had many times where we've seen a lot of fear come into the market and then we've had a big bounce, right? Fear comes into the market, then we have a big bounce. So are we setting up the stage right now for another one of those? The key thing is getting above our short-term moving averages. Our 20 and our 50-day, again, as soon as possible, will help us bring some more confidence and more buyers into the market as they see the uptrend reestablishing itself. Or if we break down, where do we catch ourselves with some buys? So that's Bitcoin in the short term here, the very near term. Also, if you break it down onto the 8-hour chart, we haven't had a meaningful breakout above the 8-hour Bollinger Bands in a while. And we haven't had a meaningful breakdown either, right? Even sort of this whole range, you could say, from the spring until now, basically has been sideways. We've had one breakout where we've established a new range, and then we've sort of broken back down to the upper end of the prior range. No crazy rally, no crazy riding the upper Bollinger Band into a trend really in any way, just sort of, sideways. Nothing meaningful here happening in any way. When we look at ETH BTC though, and again, the only reason why you'd want to be holding Ethereum is if Ethereum is outperforming Bitcoin. Trend I'm seeing here is potentially the beginning of a sideways or maybe even a downtrend here out of ETH BTC. Similar to what we had here, we had this sort of pop up off the lows where Ethereum recovered faster than Bitcoin in May. And then what we saw was it start to move sideways before it ultimately broke out and we saw the big move of the summer. So if we could see some sort of repeat of something like this, maybe we have a range that lasts anywhere between 1 to 2 months on ETH BTC, where ETH trades sideways against Bitcoin or even a little bit down while Bitcoin starts to regain dominance. You can also see this trend on Bitcoin dominance itself, which has slowed the velocity of its downtrend and started to actually rebound a little bit here. So not exactly sure what the near-term moves are for Bitcoin dominance, but the chart looks like it could tell us that prices or Bitcoin dominance could be moving higher and that ETH BTC could be moving lower. Now, if we look at ETH as well, ETH is below its 20-day moving average now, and it looks much more like it's consolidating sideways than it's still continuing to grow higher. So I think that's all validated there, that we should probably see ETH cool off for a little bit before we run the rally higher again, depending on institutional demand, retail demand, of course, overall market sentiment, number of things there, right? So those are sort of the biggest standout charts I see in the market right now. Of course, the most important factor when you're weighing a decision on buying any altcoin, for all my altcoin investors out there, of course, I'm an investor in altcoins as well. I have been for 6 years at this point, but only when we see dramatic periods of outperformance. I do not want to be holding altcoins during underperforming periods. I will give you an example here, right? This is not a time where you want to be holding this particular coin, right? for example, Maker, or everyone's favorites in this case, like Tau, or even Sui against BTC, downtrend, right? So start pricing your altcoins in Bitcoin. Start pricing everything in Bitcoin. Even, I mean, people getting all excited about gold this week. And I say, all right, well, that's awesome if you caught it in the last month. But overall, gold against Bitcoin, let's have a look. You've not been outperforming Bitcoin from the beginning of the cycle to the end. You've only just, had these brief periods of outperformance, when we were breaking down in Q1, and then just most recently here as well. So every high is a lower high against Bitcoin on the gold chart for the most part. So I think those will be my parting thoughts for you guys today. Let's see what the week ahead has for us in store. If I had to predict, I would say we need to see this week continue to the upside for September to be green as a whole. I think if we start to break down and show a lot of weakness this week, we run the risk of not having the best overall September. And Bitcoin is actually in the green for September 4 right now. So we'll see what happens. But we'll be watching the open here. We'll be watching Bitcoin's weekly candle close, of course, and seeing where the dust settles after the week here. And then ultimately, does the momentum here of this move continue? Because Friday's candle was pretty nasty. But that doesn't mean we can't push higher, right? We've had plenty of times where we've seen nasty looking candles and the rally is pushed right through. So in this case, we'll just have to see buyers stepping in, buying Bitcoin. I know a lot of the biggest macro guys in the space on FinTwit, financial Twitter, are very bullish Bitcoin, very bullish macro conditions right now, and do believe it is still the best opportunity to park your money in alongside gold for the long term. So that's my weekly roundup for today. Today is Sunday, September 7th, and I'll catch you guys in another day or two with a market update and a lesson for you all here on YouTube. Cheers, guys. Catch you in the next one. Bye-bye.